Hello, hello. How's the sound there? Is it sounding okay? Just want to make sure that it's clear enough for everybody. And yes, and we're off. Great. Well, thank you so much for spending time here today, guys. My name is Walter Peters. I'm a naked trader, also PhD in psychology, so I'm going to mess with your mind. Just kidding. Um, and I post my blog is at fxjake.com. I know a lot of you have probably read the book Naked Forex, which is great. Hopefully that you get some good ideas for trading systems to test in Forex Tester. What we're going to do today, and this is going to be directed by you, so you get to choose on this. We're going to create a strategy from the ground up that fits your personality. So what this enables you to do is trade something that you will actually believe in. Because oftentimes, I don't know about you, but when I first started trading, I was just trying to find something that would work, trying to find a strategy. I spent most of my time reading books. This is kind of before the internet had a lot on trading. It was just starting to fire up, and a lot of the trading stuff I found on the internet was actually stock trading related. It wasn't really Forex related. But it got to the point where I just wanted anything that I thought would work, and I would just follow it, and then that would be, the easy way. But what I quickly found out is that when times get tough, when you're in a drawdown, the reason why you don't stick with it, the reason why I tended to drop it and go and look for something better and get into that cycle of doom, as I like to call it, is because I wasn't really trading what I believed in. So today, you guys get to decide how we will create a strategy that completely fits your beliefs. And this is really the way to finding consistent, profitable trading, is to identify what you believe in and then go from there. So that's kind of how that works. So let's get into it. So what I want to do is ask the people here, if you are looking at the charts. Well, actually, let's see here. Let's go with, oh, the Aussie is just such a winner. You know what? Okay. Well, what I'm really trying to find here is a strategy or a chart that's going to highlight. Okay. Let's look at this one. This one's a better idea. All right. So if you were looking at this chart, I'd like for you to type in the chat box whether or not, looking at this chart, I'm not saying that you would necessarily take the trade right now. However, looking at this chart, would you be more inclined to look for a sell trade or a buy trade? In other words, looking at this chart, is it something where you go, yeah, I want to get in on a sell here, or I want to get in on a buy? Okay. Looking at this chart, what would you be most interested in? This is the Euro Kiwi 1 hour chart. And would you be looking for a buy or a sell? So I'll leave that to you guys. You let me know what you'd be looking for. What would you be looking for in this case? A sell trade or a buy trade? I'm not saying that you would say necessarily right now at this moment that you would take a sell trade, or at this moment that you would take a buy trade. But in general, seeing this chart, would you be more inclined to look for a buy or more inclined to look for a sell? Okay, so for example, somebody might be saying, well, look at the trend line. It's at the trend line, and I'm going to probably sell here. Or it's been going down. It's a downtrend, so I'm going to be looking for a reason to sell. Or even it's been making lower highs and lower lows. So here's the lower low. Here's the lower high. Here's the lower low. Here's the lower high. Here's the lower low. And then it looks like perhaps, the current candle might be the higher high. Who knows? I mean, it could go higher, whatever. We don't know, but I think at this moment, actually, this candle is the current high, and then this current candle might actually beat that out. So you're seeing lower lows and you're seeing lower highs. So that's an example of, you'd say, well, I just want to sell because the market's going down. Now, some of you are thinking, well, no, yeah, that's right. So exactly, some of you want to take a long trade. You want to go, you want to buy, you want to catch that reversal. There's a good reason for that. Our psychology is kind of set up that way. Most of the trade, and I've tested thousands of traders around the world, and what I found is that most traders are looking for that reversal. Most traders are not looking for a reason to get in the downtrend. They're looking for the reversal. So here's what I would say about that. If you were, so let's say that in this case, we're looking for a reason. Let's say that we see this and we say we want to find a reason to sell. Okay? Right. Yeah, you got it. That's it. So we want to sell. All right. So what we'll do then is, what we need to find is, our basic rule is that we want to enter into a trend. Okay? That's the first rule. We want to find an opportunity to get into a trend. Okay? Now, we need to identify the trend. So what is a trend? Well, we can say that the trend, if it's a downtrend, it's at least 3 lower lows and 3 lower highs. Okay, so we define the trend. We'll define the trend as 3 lower lows and 3 lower highs. So that is our trend. So if we see 3 lower lows and 3 lower highs, we're into, we've identified that as a trend. So in this case, you can see here, you can actually say that this peak high is lower than that one. So that's 1 lower low. That peak high is lower than that one. And that peak high is lower than that one. And then likewise, this peak low is lower than the one over here, wherever it is. It's just that one. And then this one is also lower than the previous low. And then finally, we have this recent low that just happened not long ago. Remember, this is a 1-hour chart. So there you go. So this would be a downtrend. So when we're building our system here, we're trend traders. We want to engage into the trend. And so we want to first identify a trend. So we want to see 3 lower lows and 3 lower highs. So 3 peak highs that are getting lower, and valley lows that are trending lower. Okay. Now the question is, well, how do we get in? What are we going to do to get in? Well, first of all, we have to define the retrace. Okay. So when the market goes down, there's a little bit of a retrace move. Okay. So for example, the market made this peak high and then it went down. It's against that peak high, right? Actually, a better way to say this. Yeah, that's fine. I'll just do that. And then it goes down again really hard. And then there's another retracement here, something like that. And then it goes down and there's another retracement here. Okay. So what we're trying to do here, and sometimes it's these retracements are not going to be, in fact, you could probably argue that this one is not a trend line, that it's kind of like a flat, it's like a box basically. So, it made a peak high, went down, and then the retracement was kind of flat like that. You could say something like that. Yeah, okay, something like that. So is everyone with me so far? Is this making sense? We've identified that we're trend traders. We've identified that we want to, take a trade on a retracement against the trend. So trying to pick that retracement up against the trend. And we don't want to use any indicators because we know the indicators are lagging. We know that, if you're looking at the RSI, that's based on the close and the high and the low, or, if you're looking at the moving average, that's based on the close. All of the indicators out there have essentially the same information that you get from the raw naked charts, which is indicators using the high, the low, the open, the close, and then sometimes they'll sprinkle in some sort of magic number. Some sort of magic number that they pull out of where, and that kind of creates the indicator. So, and if you don't know what I'm talking about with a magic number, go look up exponential moving average. Look up exponential moving average formula, and you'll see exactly what I'm talking about. So, in this strategy, we've identified that we want to trend trade. We've also identified that we know what a trend looks like. It's 3 lower lows, which I'll make these red. So the lower lows are red arrows, and the lower highs are our blue arrows. So we've identified that we have at least 3 lower lows and 3 higher lows. Sorry, lower highs. That's by the definition, that is our trend. And beyond that, what I like to see is this kind of movement that we see here, which is strong candles in the trend direction followed by a retracement where it doesn't quite retrace the whole way, then strong candles in the trend. And the way you know that you're in a trend is that the candles that are going somewhere, in other words, the trend candles, they are bigger and they get there faster. The counter trend candles are smaller and they don't go very far. And if you're looking at this, you know exactly what I'm talking about. So this whole day, so the day started right here where this dashed line is. This whole day, we've seen mostly small candles, with many of them with wicky sort of ends, and it's taken, let's see, 9 candles so far? It's taken 10 candles to retrace 38 pips. And the complete trend move took 4 candles to go 65 pips, right? So we retraced roughly 61.8% of that strong move that took 4 candles but it's taken even more than that. Well, actually, if you add these candles in here as well, you would be talking 12 candles. So 4 candles to go 68 pips or 65 pips, and then 12 candles to go 38 pips, something like that. The point is what? The point is that the trend candles are really easy to see, and you can identify those. So that's another thing that you'll probably see here when you get used to looking at the chart without moving averages or whatever. You'll see that the trend candles are big. They close at the extreme low in a downtrend or the extreme high in an uptrend, or they tend to. And that the counter trend candles are really ugly looking. They are wicky. They're small. They're little tiny little things. And the big brothers are the big, fat, thick, long trend candles. Okay, so now what do we do? Well, how do we trade this? Well, if we wanted to trade this really simply, we could add a signal candle to it. So a signal candle would get us into the trade. All right? And a signal candle might look something like this. It might look like we so we draw the trend lines on our retracements, like I've done here. So I know this was a kind of a flat retracement. It kind of didn't really go anywhere, and then it went trending. This was sort of a counter trend move, which is sort of more normal. Unless you're in a really strong trend, it's going to go against the trend a bit. And so now what do we do? Well, now what we're going to do is we're going to wait for the market to close below our little trend line. So the current trend line, as you can see, is right here. So we want a close below the trend line. Obviously for a downtrend, we want to close below the trend line. If we were looking at an uptrend, it would be the opposite. It would be close above the trend line. That's our signal. And beyond that, we could also mandate that the candle itself is pretty bearish. How would we do that? Any ideas? If we wanted our signal to be a bearish candle because we're in a bearish trend and a downtrend, signal candle must what? What could we say to make sure that it's a bearish candle? Remember, we're entering into the trend. We've identified what a trend looks like. We have identified what our retracements look like, or how to quote see those. And so now what we have to do is do what? Well, we have to put our signal candle to the, define the signal candle, define how we're going to get into these. Any ideas on this? Has to be a bearish candle. Yep, that would work. But I'm thinking something a little bit more than that. More than the fact that, because for example, I'll just ask, would you guys say that this is this a bearish candle because it opened at 1.4680 and it closed at 1.4679, so it closed 1 pip lower than it opened. Actually, it closed 0.8 pipettes lower than it opened. So is that a bearish candle? You know what I mean? Like, you can kind of see my point. So what I would suggest is if you wanted to create this system in a way where you're taking advantage of just using naked patterns, and you're taking advantage of identifying the trend, and you're taking advantage of the trend because you're entering in on a re-engagement of the trend and trying to ride these big daddy candles right here, like these 4, and these 2 or 3 out of these 4. Over here, it's not clear that it's in a trend. It's kind of rolling over here from going up to going down. But the point is, you want to ride these big fat candles on the way down. So what you do is you make sure that you get in with a little bit of momentum. And what I would suggest, again, we're just coming up with this on the fly. What I would suggest is that your signal candle must close in the bottom third. Sounds familiar? That's kind of like the rules to the kangaroo tail. Bottom 33%. So how do you check that? I'll show you a quick and dirty way. We'll talk about stop placement in a minute. So the signal candle must close in the bottom 33% of the candle. So the way we do that, let's say that, for example, we're looking at this candle right here. I'm going to zoom in so everyone can see this. Oh, I've zoomed in as much as I can, actually. Apparently, that's as zoomed as I can get. The 38.2% is higher. So basically, this close right here is below this line, which I will show you. That's the 33% level. That's the bottom third of that candle. And because the market has closed below that, this is a valid signal candle. So this candle right here that I'm going to mark with the thumbs up, that's a valid signal candle, see? So then what do? Well, we sell on a breach, sell when the market goes a few pips lower than that signal candle, again, to confirm that it still wants to go lower, that it's still in a bearish trend. So we'll go sell 5 pips lower than signal. And then finally, stop loss. And you might want to slap a trailing exit on this. Stop loss goes above the recent swing high. Now, what is that? Boom. Stop loss above recent swing high. All right. So, stop loss above recent swing high would be this. So for this signal candle right here, the one that I've identified right here, that would be this candle's high right here. So you would be risking, if you're 5 pips lower than the low on this candle is 26, so it'll be at 21. So you'd be risking about 44 pips, which isn't a whole lot actually on the Euro Kiwi. It seems like a lot, but this pair really moves. You're risking 44 pips because your stop loss is going to go right here above that swing high. Sell order goes 5 pips below the low. Okay, so now what do you use? A trailing exit. You could use a trailing exit. You could also use a target like 2 to 1 or something like that. And you'll notice that you actually have another one right here, another signal. According to our rules, again, this is just a framework. If you don't like these rules, you can certainly adjust them. But what's interesting about this is that we don't have a signal yet on the third signal, but we have 2 here, and we can see what their situation would be. So 5 pips lower than the low. The low on this candle is 90, so 85 would be the low, would be the entry. So your stop loss would go up there at about 48 pips away. Now you could put your stop loss above the signal candle if you felt really good about that. You could do that, there's no doubt. But it's a little bit safer to use the recent swing high. And the reason why is sometimes what will happen is the market will come back up and retest this trend line. If it does that, it could stop you out. So you always run the risk of a lower win rate if you have a tighter stop or higher reward to risk ratio. That's just the way it works. All right. So does that make sense? So that one obviously would be, I think we said it was 48 pips of risk. That one would be currently in a bit of a drawdown, maybe 20 pips drawdown, something like that. But overall, it went 20 pips in your favor. It's gone 20 pips against you here, and you may get another one. So this affords us an opportunity to actually stack trades. So if we're in a strong trend, we could have several entries and take advantage of that. The only question is, how do you get out? How do you get out? What would be some ways that you might get out of these trades? I reckon a trailing exit may make sense, but you could also go for like a 2 to 1 target on these entries. But a trailing exit might make sense where you go, or you could split it up. You have 2 to 1 target on some, and then a trailing exit on others, where if the market moves, you could, for example, you could ratchet your stop loss like this. So every time the original position right here, which is off this little candle, that stop loss could have been moved here after you took your second position right here. So once you took your second position, your first position is guaranteed to make a little bit of profit. And then let's say that we get another one soon, another signal on this up move here, then you could ratchet your stop loss down below that one, right? And same thing with the second position. Assuming the second position doesn't get stopped out and that it survives and that the market does make another leg down here today, you would be ratcheting your stop loss on that position too, because currently it would be up here. Does that make sense? Does everyone see kind of how that works? Understand why I say first you have to define who you are. If you're a trend trader, you enter into a trend. When are you going to get in? On the end of a retracement. How do you define a trend? 3 lower lows, 3 lower highs. Draw trend lines on your retracements. They don't have to be trend lines. They could be flat lines, like horizontal lines if the market's just flatlining during the retracement phase. You wait for the market to close below your trend line. You make sure it's a good close, because sometimes what will happen is it'll close kind of like right on the trend line, and it's a little, you don't really want one of those neutral sort of candles where, you know, it kind of opens and closes at the same spot, or maybe just barely breaches the trend line. You want it to be a bearish drop off the trend line, like a clear move away from the trend line. That's critical. People, you know, sometimes people get really stuck into the minutia of trading, and they say, well, will it breach the trend line? Well, yeah, technically, you know, we might have said, like, depending on how we drew this trend line, we might have said that the last candle right here, this previous candle, that actually broke the trend line. And I would say no. Why? Because our rules stated that it needs to be in the bottom third, and this is clearly closer to the midpoint of that candle. Let's see. That close might be in the bottom 45% or something, but it's not in the bottom third. Yeah, you can see it's actually, yeah, probably right around 40, 41% is where that close was. So that would not qualify. Okay? Now, what are some other things that you might be able to do here? Well, you might make the signal candle something different. Instead of using that, maybe you don't like the 33% close thing that I talk about. Maybe what you do is you say it's the biggest bearish candle that we've seen in the last 6 candles, or it's the biggest, or it's the most bearish candle, the widest range we've seen in the retracement. So if we're defining the retracement as being from here through here, then our signal candle has to be a wider range even this candle, right? You could do that. I think that would be a little bit strict just because it, even though this has a wide range, it's a very neutral looking candle because it basically opens and closes right around the same area. So maybe your rule is it has to close near the low within X percent. I like 33%. If you want to be really aggressive, you can use 10%. You just won't get as many signals, but you'll get really good ones. Those are the sorts of things that you have to work out. It's up to you, basically. It's up to you to figure that out. Yeah. Yeah. Any questions? Is this making sense? Why am I? Well, there isn't really any hard and fast rule on the 33%. Okay. I'll tell you, I like 33% simply because it kind of makes sense. You could use 25%, the bottom quarter of the candle, or bottom 20% of the candle, the bottom fifth of the candle. It doesn't really matter. Really what I'm trying to do here is identify a way for you to see a continuation of the trend without using ADX or whatever moving average crossover or whatever, Like if you were, I'm just curious now, if you were using a moving average crossover, let's say you had like a 21 and then a, now I'm going to totally mess up my chart. Let's say this was like a 63 or 61. Yeah, it's probably not a good some traders actually trade the bounce off the moving average. You can see like there's a move to the moving average, a move to the moving average, whereas here you're going, uh-oh, it's not, it's gone beyond the moving average, and maybe it goes to the next one or whatever. I don't really know what to make of these indicators, these moving averages. All right, so maybe what we'll do now, guys, is we'll move to these rules for an uptrend. Okay, let's see if we can do that. So what we need to do is find a situation where the market's moving up, 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 making at least 3 okay, so here's your high or low. 1, 2, 3. Actually, I don't think I should use that one because it didn't actually make a really nice peak. So I use this one. I kind of want there to be higher highs in between the higher lows. You know what I mean? So we'll do that. All right. 1. Oh yeah, these should be. So these are higher highs. These should be blue. And here's another one right here. Boom. Okay, so we know we're in an uptrend. So now what we have to do is we have to start looking for what? Well, what's the retracement? So these are the bullish trend candles here, these white ones. And so your trend lines are going to be downward, right? Because they're against the trend here, right? So let's see. I'm going to hit the F12 key, advance my charts, and wait for a signal candle. Is that a signal candle? No. There's a couple of reasons why I really don't like this one. Because, first of all, it's the interbank period, so there's not much volume at all. And second of all, it's not a close up in the top third. It's not a really big, fat, bullish candle, so I don't like it at all. Okay, maybe that we can say that, okay, that's finally a, maybe what happens here is you just ignore that, go like that. And so now here's your signal candle right here. Here, let me zoom in on this so you guys can see better. Have I completely lost the plot? Here we go. Okay. So boom, bam. Okay, so we got a signal there. Stop loss goes where? Down here. We put my big fat red stop down here. I think this one's going to get stopped out, but I don't want to peek, but I think it does. Let's see. So now here's our signal candle. We're in. It's closed really strong, and we're going up. And so now really what we want to see is we want to see it take out this high, right? Nope, it's coming back. Again, this is why I don't like using the signal candle as I don't like that idea, as using that as the stop, because we would have been stopped out on this retest of the trend line. But now we're going to bounce off of it. I think we're actually getting into the European session here, so maybe there's a bit more volume. Yep. Oh, wow. And there we go. So it didn't get stopped out, actually. It survived. And now again, whoa. So this was a kind of a little brief retracement here. So at this stage, what would you be up on our naked trend trading system? You'd be up something like 89 pips. And your risk would have been something like 30 pips, 30, 35 pips, most likely. All right. So now we want a retracement. Okay, here we see it looks like we might be getting a retracement here. Is this making sense, guys? You all cool with this? It looks like that was the end of the week right there. Okay, so you got to wait for next week. Here's Asia on Sunday, Monday. I really dislike taking trades on the Monday of the first Monday of the week. But anyway, looks like this trend breaks down anyway. That brings up a good point, actually. If the market is not following your pattern of explosion candles up, like trending candles up, and then small little candles down and trending candles up, then it probably is now consolidation. Like if I'm looking at this chart and I see that it's been basically in this box for like 2 days, Monday and Tuesday hasn't gone anywhere. At that stage, I have to start thinking, maybe my trend's over. Maybe we've gone to consolidation mode. But the good news is, with your signal candle here, if you had some sort of a trailing exit, probably would have been stopped out on this candle, or even, the open of the something like that the following week, or maybe you get out at the end of the week just as a rule because you're trading the 1 hour chart or whatever. I don't know. The point is, it's just the weekend that kind of messed with us. So, and there's nothing magic about the Euro Kiwi or the 1 hour chart. I just wanted to show you what I would say, how I would build one for a trend follower, if that makes sense. Any questions about this? Are there any charts that you guys want to see? I can show you the live charts. I noticed a couple of things. So I'm in on a sell on the Kiwi, on the daily kangaroo tail that was right here, identified by this blue arrow. And I just missed my first target by like 13 pips or something like that. And so now what I'm doing is I'm watching. It might get stopped out at break even. It's at plus 5 pips. I don't know. not too concerned about that. I know some people freak out, like, oh, you had a profitable trade and now and now it's going to be, you know, a break even, or, you know, you make 5 pips and you had 100 or 120 or whatever it was. That doesn't really bother me. But having a winning trade turn into a loser like that bothers me. So that's why I use the break even stuff. But look at this. This actually, it's difficult kind of to see here, but let me see if I can back this up. You can see this was earlier. This was kind of looking like a potential shoulder, head, and shoulder. The problem I have with this is it's actually, it's not really coming, like if the neckline, of course, is right here, it's kind of not looking. Does everyone see what I'm talking about? So this would be your shoulder. This would be your head. Head right here. And this would be your other shoulder. The problem, though, is that you could argue that the head only just recently pinched off on the neckline, and that this is the shoulder. It's kind of a wonky head because it took, see, here's where the shoulder was pinched off on the neckline right here. You can see this really well on the line chart. That's a clear shoulder. This, though, is like a triple head or something. It's not very clean and clear. And then, boom, you do it right there. So, this is a bit tricky. I don't know if, we'll see what happens. If this takes out the head high over here, obviously it's no good. But if it starts to fold over here and make another shoulder, this could be a potential trade on the, you know, in the 30-minute chart or something like that. That would be one that I would say might be worth watching, especially since we know we're on an area here of support and resistance historically. So it's a pretty good spot for a trade, actually. I don't typically look at these lower time frame charts, but the reason why I'm keeping my eye on this is because obviously I'm in this trade. So that's one I would keep an eye on, is that that Kiwi trade. There are a few others. I'm also in the Aussie, which has come back down. So, all right, so let's talk about this one. This one is a so it's a squeeze play, all right? And the reason why it's a squeeze play is because this trend line was pushing the market up against this horizontal level, which I drew at 76.90. So it kept going higher, then fall, trend line up, trend line up. So what I'm saying is that I wanted it to take out this high over here because there was actually a higher high over here. Where is it? Actually, yeah. So I wanted to take out, I guess the highest one is this little kangaroo tail looking thing. But the point is, there's 2 entries. One was at 77.09, which is basically just a breach of the horizontal resistance level. And then the second thing is you can get in on the retouch because they'll often pull back and retouch like this one did. This candle right here is going to close, well, it's a 4-hour candle, so it's going to close in an hour and 20 minutes or so. But if it closes something like this, that's a really good opportunity for traders who didn't get the breakout. You can get in on this. So I would put a buy order a few pips above this. Maybe the high is, what's the high? Like 70.16, so maybe 77.20. My stop loss could go down here below. That's 33 pips of risk. I've got my stop all the way down here, so I've got, you know, 75 pips of risk, 80 pips of risk, but this could be like a 40 pip risk on that entry. And now there is going to be some resistance coming in at 77.58. The issue, the really nice thing about this trade is if you go and look at the broker's data on the percentage of traders who are long Aussie, what you will notice is everyone's buying Aussie right. Or sorry, everyone's shorting the Aussie right now. So I think it still has some upside to go. It's 65 to 70% of the traders, retail traders, are actually thinking that this is going to turn around here. It's going to fall. It's going to fail. It's not going to make it. Well, that may be the case, but right now it's looking very bullish, especially if this candle prints like this. It's going to be a great opportunity to get in on an uptrend. So I don't think it'll necessarily break. Like, look, there's some serious resistance that's going to come in. Well, 77.58 is one spot, but another one is a little bit easier to see here. I'll go back to daily, actually. I'll show you. Here's the high, the swing high here that I'm talking about, but this is another one too right here. So that was last April. So 78.20 is another 78.10, 78.20 in that area. You're also probably going to see a lot of sellers come in. So it'd be really interesting to see if it could break through that, because it might break through 77.58. But if it can do that, then it's probably going to test 78.10. And there's a lot of pips between here and there. So there you go. So that's a very, very interesting one, that one. The other one that I like is the Euro Aussie right now. So at the moment, our Euro Aussie, the other one I should mention is the Euro Swiss. So this is a kind of a similar thing. A lot of people, if you go to look at the crowd, a lot of people are actually going long Euro Swiss, and this is in that same pattern that we saw on the Aussie yesterday, but now the Aussie's broken through. The Euro Swiss has not broken through the floor here. So this is a bearish squeeze plate. It's going to break through, probably come back up and touch it like the Aussie, and then from there go away. Now you could just sell it at 106.22 after it breaches these lows, but also you could wait for that retouch to be safe for the retouch. Because sometimes it'll stab lower and trigger, but trigger your order. The thing I like about it is 70, 71, 69, 75. A lot of the traders, around 70% of the traders in retail are doing what? They're going long Euro Swiss. That means they're probably going to get stopped out, and it's probably going to cascade lower. I would not be shocked to see some huge bearish candles and the market really take out this floor here at 106.30. So that's an interesting one. Now the Euro Aussie is the other one that I wanted to show you, but here it is. So I think the Euro Aussie is probably going to try and hit 38. If it hits 38 and prints a bearish candle on the 1 hour or the 4 hour chart, I'm probably going to be interested in selling. Reason why is it's been in a really good downtrend, and I think it's going to continue. So until we get some sort of mad, crazy, bullish signal, I think selling the Euro Aussie off this level makes a whole lot of sense. So that's my thought on that one. So that's another one that I'm watching. That's the Euro Aussie. Could be the 1 hour, could be the 4 hour. Basically, just needs to come up here and retest the floor here. That's basically it. So that's what I've got, guys. I really appreciate your time. I hope that you have a wonderful trading week and hope that you enjoyed building a naked system from scratch. What's nice about that is now you can go out and do that on your own. You've got a couple of different ideas, looking at where the close is, where the candles are in relationship to others. These are the sorts of things that you can use, these ideas, to figure out how to build your own system. So hopefully that helps. Thanks a lot. Have a wonderful trading week, and we'll see you soon. Take care. Bye. Thanks. Bye.